Tired of low returns and high risks? In the world of investing, making informed decisions can be the difference between financial success and missed opportunities. That's why today, I'm covering a crucial topic for anyone looking to grow their wealth over time: the best ETFs for long-term investing. But with so many options out there, how do you choose the right ones? In this video, I will show you the top 5 ETFs that promise the highest growth potential for long-term investors. We'll explore their unique features, historical performance, their holding, and why they stand out in the crowded ETF market. I will show you how much you can earn from a one-time investment of $10,000 in each ETF. In the end, I will show you a high-potential growth ETF that has the potential to add over $10 million to your portfolio. Stick around to find out. Coming up next are ETFs ranked from the best to those that seem like a once-in-a-lifetime opportunity, with the potential to offer high long-term value to your investment. The first ETF on our list is the Technology Select Sector SPDR Fund ETF, known by its ticker symbol XLK. This ETF is a powerhouse in the tech sector, with an impressive track record since its inception in December 1998. Managed by SPDR State Street Global Advisors, the ETF offers a low expense ratio of just 0.09%, making it an attractive option for cost-conscious investors. With an AUM of $72.84 billion, it's one of the largest and most liquid ETFs in the market. So what makes XLK stand out? Let's start with its historical performance. XLK has delivered a staggering price return of 493.87%. Even more recently, in the past year alone, it achieved a return of 36.48%. This consistent performance underscores the strength and resilience of the technology sector, which continues to drive innovation and growth globally. Investors are often drawn to XLK for its unique features. The ETF focuses on large-cap technology companies, providing exposure to industry giants like Apple, Microsoft, and Nvidia. These companies are leaders in their respective fields, offering robust growth prospects and significant market influence. Moreover, XLK's diversification within the tech sector helps mitigate risks associated with investing in individual stocks. Looking ahead, the future projections for XLK are equally promising, with a current dividend yield of 0.65% and an average dividend growth rate of 8.66% over the past 10 years. Not to mention the average share price appreciation of 19.72%. Let's break down the numbers. If you invested $10,000 in XLK, after 1 year, your investment would grow to approximately $12,037. Over a decade, that investment could soar to around $62,569. If you're in it for the long haul, the projections are even more compelling. After 20 years, your investment could reach $382,453. And after 30 years, it could skyrocket to an impressive $2,320,902. Experts agree that XLK is a strong choice for long-term growth. Financial analysts highlight the ETF's ability to capitalize on the ongoing digital transformation, cloud computing, artificial intelligence, and other technological advancements. As these trends continue to evolve, companies within XLK's portfolio are well-positioned to benefit, providing substantial returns to investors. Next up, we have the Vanguard Information Technology Index Fund ETF shares, commonly known by its ticker symbol VGT. Managed by Vanguard, this ETF has been a favorite among tech-savvy investors since its inception in January 2004. Its substantial AUM of $87.56 billion speaks volumes to its popularity and liquidity. VGT's historical performance is nothing short of remarkable. Over the past decade, VGT has delivered a price return of 507.75%. In the past year alone, it achieved a return of 36.91%, underscoring its robust performance even in a competitive market. This ETF is designed to track the performance of the MSCI US Investable Market Information Technology 2550 Index, which includes large, mid, and small-cap stocks within the technology sector. The diversification across different segments of the tech industry, from software and hardware to IT services and semiconductors, help reduce risk and enhance growth potential. Additionally, VGT's holdings are rebalanced quarterly, ensuring that the ETF remains aligned with the evolving tech landscape. Looking forward, the future projections for VGT are highly optimistic. It has a current dividend yield of 0.62% and an impressive average dividend growth rate of 14.63%, backed by an average share price appreciation of 19.97% over the past 10 years. Here's a closer look at the numbers. Investing $10,000 in VGT could grow to approximately $12,059 after 1 year. After 10 years, this investment could swell to about $64,334. In 20 years, your investment could reach $406,827, and in 30 years, it could climb to an astonishing $2,547,153. The total value added from capital appreciation and dividend reinvestment over 30 years is a phenomenal $2,537,153. These returns are superb, but there are even better options out there. In the end, I will show you a high potential growth ETF that has the potential to add over $10 million to your portfolio. Moving on to our third ETF, the iShares US Technology ETF, which trades under the ticker symbol IYW. Managed by iShares, this ETF has been a staple for tech investors since its inception in May 2000. With an expense ratio of 0.0%, it's a bit higher than some of its peers, but the returns and exposure it offers make it a worthwhile consideration. The fund's AUM stands at $19.97 billion, indicating its significant presence in the market. Historically, IYW has delivered impressive returns. Over the past 10 years, it has achieved a price return of 533.06%, showcasing its capability to generate substantial gains for its investors. IYW has returned 45.78%, reflecting its robust performance in the tech sector. When we look at future projections, IYW continues to show strong potential. Despite having a lower current dividend yield of 0.20% and modest dividend growth of 1.95% over the past 10 years, the ETF's share price appreciation more than compensates, standing at 20.47% on average each year. For instance, an investment of $10,000 in IYW could grow to about $12,067 after 1 year. Over a decade, this investment could grow to approximately $64,890. For those with a long-term investment horizon, the projections are very promising. After 20 years, the investment could be worth around $418,220, and after 30 years, it could reach an impressive $2,693,086. Although the dividends might seem minimal at $12 annually or $1 per month, the substantial capital appreciation significantly boosts the total value added, amounting to $2,683,086 over 30 years. Experts in the financial sector highly regard IYW for its strategic focus and portfolio composition. Analysts highlight that the companies within IYW's portfolio are pivotal in driving major technological advancements in areas such as artificial intelligence, cloud computing, and digital transformation. These advancements are expected to continue fueling growth in the tech sector, making IYW an appealing option for long-term investors. The second ETF on our list is the Invesco Semiconductors ETF, known by its ticker symbol PSI. This ETF is managed by Invesco and has been available to investors since June 2005. With an expense ratio of 0.57%, it is higher than some other ETFs we've discussed, but PSI's performance and growth potential make it a strong contender. With an AUM of $961.47 million, it is a significant player in the semiconductor sector. PSI has delivered outstanding historical performance. Over the past 10 years, PSI has achieved a price return of 761.27%, making it one of the top performers in the tech-focused ETF category. 1 year returned 46.08%, reflecting the robust demand and innovation within the semiconductor industry. This ETF focuses specifically on companies involved in semiconductor manufacturing and technology, providing targeted exposure to this critical sector. The unique appeal of PSI lies in its concentrated focus on semiconductors, an industry that is the backbone of modern technology. Its portfolio includes key players like NVIDIA, Intel, and Texas Instruments. These companies are at the forefront of developing and manufacturing essential components for a wide range of tech applications, from consumer electronics to advanced computing systems. Future projections for PSI are equally compelling. Despite a relatively low current dividend yield of 0.19%, PSI has shown impressive dividend growth. with a 14.13% average increase over the past 10 years. If you invested $10,000 in PSI, after 1 year, your investment could grow to approximately $12,434. Over 10 years, this investment could rise to about $87,860. In 20 years, the investment could grow to $766,941. And after 30 years, it could reach an incredible $6,679,638. This includes annual dividends of around $478, translating to about $40 per month. The total value added from capital appreciation and dividend reinvestment over 30 years is a staggering $6,669,638. Financial experts consistently highlight PSI's strategic focus on the semiconductor industry, which is expected to continue experiencing significant growth due to ongoing advancements in technology and increasing demand for semiconductor components. Analysts point out that the companies within PSI's portfolio are well positioned to benefit from trends such as artificial intelligence, 5G, and the Internet of Things, or IoT, making PSI a compelling choice for long-term growth. Rounding out our list, and top pick of the year is the VanEck Semiconductor ETF, trading under the ticker symbol SMH. Managed by VanEck, this ETF has been a cornerstone for investors since its inception in December 2011. With an AUM of $24.15 billion, it commands a significant presence in the market. Over the past 10 years, it has delivered a phenomenal price return of 1,005.79%, making it one of the top performing ETFs in the sector. In the past year alone, SMH has achieved a return of 81.80%, underscoring the incredible growth and demand in the semiconductor space. This ETF targets companies primarily involved in the design, distribution, manufacture, and sale of semiconductors, providing investors with focused exposure to this critical industry. Financial analysts frequently commend SMH for its targeted approach and portfolio composition. Experts highlight that the companies within SMH's portfolio are positioned to capitalize on major trends such as artificial intelligence, autonomous vehicles, and advanced computing. These trends are expected to drive sustained growth in the semiconductor industry, making SMH a highly attractive option for long-term investors. Looking ahead, the future projections for SMH are exceptional. It offers a dividend yield of 0.38%, an average dividend growth rate of 12.21%, and an average share price appreciation of 27.17% over the past 10 years. An investment of $10,000 in SMH would grow to about $12,755 after 1 year. Over 10 years, this investment could expand to approximately $112,408. For those committed to long-term investing, the projections are particularly impressive. Over 20 years, your investment could grow to $1,247,446. And after 30 years, it could reach a staggering $13,808,314. The total value added from capital appreciation and dividend reinvestment over 30 years is an astounding $13,798,314. But they lack dividends. If you want to get paid over $20,000 in dividends, click the video on the screen.